Neeraj Gambhir, Managing Director and Head of Fixed Income Group with Nomura Capital. Neeraj, good morning. Thank you for joining us. Neeraj, the core fundamentals for Indian economy are weak. Macro picture is slightly scary. But the fall in rupee this week, I'm sure, has surprised everyone on the street. The fundamentals are not that bad that it warrants a 7-8% crack in just a matter of 4 days.
Yeah, I think so. The rupee, movements are quite volatile and quite extreme at this point in time. And I think a lot of this volatility is not just the domestic factors, but also the fact that, the dollar has been extremely strong in emerging currencies, and we are seeing a similar sort of behavior, maybe a little less pronounced in case of, currencies like Indonesia, Malaysia, Thai baht. So it's a very similar reaction. It's a sort of an emerging market phenomena at this point in time. And I think as far as currencies are concerned, markets are getting weighed quite a bit by the pronouncements that are coming from Fed or the discussion in FOMC. And the expectations around the path that Fed is going to take over the next few months.
In the near term though, Neeraj, do you think that is what is going to dictate how the currency markets pan out? What the Fed does in terms of tapering, how it impacts the dollar and thereby the rupee?
So I think there are a few things that the market is going to watch out over the next, let's say, 1 month or so. We have obviously, data which is domestic GDP data that we have to watch out for towards the end of this month. And that should tell us as to how strong or weak, the economic growth is. We all know it's pretty weak, but the question is how weak it is. The second aspect that the market is going to watch out for is the RBI policy, which is there in the next middle of the month. And the third thing obviously is the FOMC itself, whether in the September FOMC do they decide to sort of roll back some of the purchases that they have been doing and do what is being called as tapering in the market, and the amount and the extent of that tapering. I think by sort of allowing a bond shift in the bank portfolios and doing OMO purchases in the government bond market, I think the RBI is sort of trying to de-link the movements in the currency and the bond market. Now that is being seen as one indicator of RBI sort of backing down a little bit on its defense of the currency as far as the interest rates are concerned, and allowing the rupee to sort of go where it could potentially go, and that's also a factor which is kind of weighing behind such a sharp movements in the rupee over the last at least 2 or 3 days.
Do you think for currencies to stabilize, the central bank and the policy makers, they have to stop intervening?
Well, I don't think, just stopping to intervene will stabilize the currency. I think the concerns around macro factors would still stay. I think what we really need at this point in time is basically, two things. One is that we need sort of some sort of stability in the global financial market as far as dollar versus emerging market currencies are concerned. It looks pretty elusive right now to me. I don't know whether it's going to happen in the next 7, 10, 20 days or so. The other thing that can actually possibly weigh positively for the currency is a big bang reform measure by the government. There has been a lot of talk about a diesel rate hike. If something like that gets implemented and the government sends out a strong signal to the market that is still committed towards bringing in the fiscal deficit, then I think that's something which can sort of probably bring some sort of stability into the currency.
What about the 10-year bond yield then, Neeraj? Because that has spiked up almost a good 15 basis points. Where do you see that stabilizing?
So I think a lot of volatility in the bond market was actually coming from the fact that interest rate as a tool is being used to defend the currency, and currency was sort of not stabilizing. I think there has been some bit of a decoupling there in terms of Reserve Bank trying to calm the longer end of the bond market curve by announcing the OMOs. And therefore, from the market perspective, what is important is to see how those OMO auctions go, which is slated for tomorrow. We'll also see as to how the fresh supply of the government bonds gets taken up. At this point in time, we've seen the bond markets react down to 10-year react down to 8.25, come back into about 850, 855 level. I do feel that in the near term the range is a little wide. I think the market will probably trade between 8.5% to 9% range, depending upon the outcome of these auctions.
Neeraj, US bond yields have gone to about 3%. emerging market currencies have virtually collapsed in last 1 month, and this has happened only on fears of tapering. The real tapering will start in the month of September. So what happens when the real tapering will start?
Well, we are all hoping that all this is basically a discounting of the real tapering, and when the news actually hits the floor, the market reaction is not as wild as we have seen in preparation for the tapering. I think it's really basically markets adjusting and trying to anticipate what the Fed action is ahead of that. I think at some point in time you got to realize that if the Fed is forced to taper a lot more than what is currently expected, it is essentially good news on the U.S. economic front, and that will have some positive effect on the emerging market economies. And I think at some point in time the markets will need to sit up and take notice of that factor. Also, the spike in the bond yields, in a sense, could also prove to be a drag on the U.S. economy, and therefore that itself could sort of force Fed to take a little bit of a easier view on the extent of the tapering requirement. So I think those two factors are something which we think we need to watch out for. Really, the extent of U.S. growth over the last 2 quarters has not been as much as it was anticipated, and clearly the Fed is still quite data dependent. So I think the markets will have to probably deal with a lot more volatility going forward, but I do expect that as the tapering starts, some of the reaction that has already been built into the market sort of gives way to more sensible thought process around what should happen to these economies.
Neeraj, some experts in the market are also talking about a rupee level as weak as 70 to the dollar. Do you think that's a possibility?
Well, if you go by the pace of depreciation that you've seen in the last 2 or 3 days, I think anything is possible. But having said that, I do feel that it seems to be getting into a zone where the sentiment is sort of taking the precedence over the real factors. So I think that while we might see volatile spikes, I don't personally expect the rupee to go to 70 in a very short period of time. I do feel that Reserve Bank will try and intervene and sort of try and slow the pace of depreciation of the currency.
Neeraj, the street is divided on what is the real level for rupee and at what price point rupee essentially will become competitive. Do you think at 62, 62.5 rupee is already very competitive?
Well, I think the concept of competitive currency, I think, is driven by what is your real effective exchange rate and how much does the currency need to depreciate to make sure that your real effective exchange rate does not really appreciate too much. I think there is a very divided opinion around what is the right level of rupee in terms of real effective exchange rate and how much do we need to really depreciate over a period of time. I think if you just look at the inflation differential aspect of it, the currency probably needs to depreciate easily by about 8 to 10% in a year to maintain that competitiveness. So while those are all theoretical economic arguments, I think there is a tendency for the markets to overshoot whatever is being defined as the as the equilibrium or sort of in a sort of intrinsic value of the rupee, if you were to use that concept. So I don't really know. I think it's at the end of the day the market will have to sort of trade it out with some volatility to figure out what it feels is the right and comfortable level of the rupee. And I think eventually the adjustment in the CAD is, to my mind, the real evidence that depreciation of rupee is working. Unless and until the market sees the data which convinces it that the adjustment in CAD is happening and it's happening in a meaningful way, I think the depreciation pressure on rupee would just continue.
Neeraj, good chatting with you. Really appreciate you taking the time out and speaking with us.